Okay, welcome back to Halftime Report on CNBC TV18. For now, the market is very quiet. There's no real movement, actually. It's just consolidating around that 18,600 level, but the bank nifty is where all the action is at. Rahul Sharma, who's the head technicals and derivatives at JM Financial Services, joining us right here in the studio. Rahul, thank you so much for being with us here. Before I ask you about the overall market setup, we are at the end of the year. I have to ask you about banks because there's so much traction there. Are there still any banks where you can take a fresh upside technically, where there's, perhaps more to go?
Yeah, so banks, the first leg of this rally was highlighted by the PSU space. They've done their bit. We've advised clients to book profits in them. They've seen like the rally of possibly this phase. Now is the time to focus on the private banking space. So some of the smaller names in private banking space, they look good. Even the heavyweights like something like an HDFC bank looks good for a 10% upside. So I think that is where the traction is. That is where the risk reward is also favorable as far as technicals are concerned.
Okay, so you're not expecting further upside or a significant upside in the likes of Bank of Baroda, the PNBs of the world, which have already they're either at lifetime highs or at fresh 52-week highs. There's no incremental upside you're expecting.
Yeah, so Ekta, as far as Bank Nifty is concerned, we are seeing at a 45,000 target possibly by budget. Now, even PSUs will do well, but on a relative scale, they have become very overheated. So a bit of correction here, maybe 10, 15, 20% correction. If it happens over a period of time, that will make them attractive once again. So clearly from a risk reward perspective, I think it's better to switch to the private banking space as compared to the PSU names.
Okay, switch to private banking. In fact, I think names like Axis Bank are still sitting at fresh highs, right? Day after day, there are fresh 52-week highs on Axis, ICICI Bank. So you're saying it's not a crowded trade just yet. There's still more to go on these names.
Yeah, absolutely. So some of the, there are two legs of private banks. You have Axis and ICICI, which have done very well. So probably the momentum traders can focus on them. Then you have the second rank stock, something like a Kotak Bank, something like an HDFC Bank, which has been broadly an underperformer as far as the other two names are concerned. So I think that is where the catch-up rally can play in. So, these are the names where we can still see another 10-15% upside in the short to medium term. And some of the small and mid-cap names are the ones, where the juice is, where the maximum upside is in terms of headroom.
Mid-cap names, tell us.
So, in fact, we have in our small cap basket, one name that we like is City Union Bank. That has got a decent bit of upside. Another one which is like, the retailer's favorite is Yes Bank. That looks due for a good round of upside from current levels. So these are two names where we have a good bit of conviction as far as the setups are concerned, and we believe that 20 to 30% upside is a very much near-term possibility in them.
Okay, so banks is a well-known, it's an old story, right? Tell us about something new. As we head into the new year, what are the stocks where I can generate, alpha for my portfolio or technically which look good apart from banks? Either large or mid caps.
Yeah, so 2022 the markets learned two lessons. One is iron ships don't sink, and second is elephants can dance. So a few months back, the kind of moves we saw in PSU banks, not many people envisaged that.
Are you talking about ITC when you talk about elephants can dance?
So there are a lot of elephants in the room actually. So one of them is the PSE index, which is the public sector enterprise. Now there are two things happening at the same time in the PSE space. One is they have done well in this calendar year so far. Last couple of months, they have seen some consolidation happening. So technically, if we see, it is like a 14-year of massive underperformance that is there in the PSE index as such. Now, what that translates it into is a massive upside in the long term, very significant upside in the short to medium term, and two, with the budget coming up, this sector any which ways hogs the limelight generally in December, January and February periods. So if you are a trader, this is the area to be. If you are an investor, this is the area to be. So as far as the index is concerned, I think 20 to 25% upside is a very much possibility in the next 3 to 6 months in the PSE index, which translates to about 25% plus and minus 5% for the index components as well.
So which are these picks that you have technically within the PSU or PSE space, and what is the upside that you probably expect?
Yeah, so we have to look at how the index components are placed. So the top tier, or the heaviest weights are NTPC, which is right there at the top, which is 14%. So NTPC, particularly what is happening is this stock has been in a secular uptrend since many months now, and now it seems that it is shifting gears for a a newer, I would say, a possibility of another 20-25% upside is a very much likelihood in the medium term. Now, secondly, there are, what is happening is the BSE Power Index, which is, the index which tracks the power companies. There, the leadership has come back to NTPC. So, it is part of two indices. One of them, both of them, it is like a heavyweight, and we feel that at the recent pullback from 182, 183 was the high. It came down to 164. This pullback is a very good opportunity to re-enter. So, time and again, the stock has honored its 100-day, 200-day moving averages. It has seen supports at regular corrections, and I think time is now right for a follow-up round of rally from current levels.
Okay, I know I do want to get a long-term chart up of BEL, because that's another stock that you're tracking, right? And you have a 25% upside there. Almost 3 years back in December of 2019, BEL was 30 rupees, I think 25 rupees.
Absolutely.
And now the stock is 100 rupees. So that's the 12-month chart that we have. But if you look at 3 years, you'll notice a big run-up. Don't you think that it's juiced out here? I mean, I know you have a 25% upside, but don't you think the best is already in?
Yeah, so we have to see that, it has been like 14 weeks now that, the stock has been consolidating around this range. So generally, when you see such secular, bull runs, a consolidation always or a correction makes it a healthy re-entry opportunity. So what we feel is, the government's increased focus on use of technology for defense, that is going to be one key area, one key positive. They've got a very strong order book. I think another, the next round of rally which comes could easily take the stock to around 120, 130 odd levels. And, this is one of those stocks which has shown strong outperformance in the entire PSE space. So this is like in terms of performance, the price leader for the entire PSE basket.
Okay. So Rahul, we've spoken about PSU banks. We've spoken about private banks. We've spoken about PSEs, which you're probably bullish on ahead of the budget on a 3 to 6 month time frame. Tell us about your picks X of these sectors. What would you probably recommend? Give us something technically segment-wise, sector-wise, stock-wise.
Yeah, so clearly 3 areas of the market which look pretty solid as far as, say, the next 2-3 months are concerned. So one is the mid and small cap space. That is where a lot of, I would say, hot money has come back. This was one sector which was quite a laggard for an elongated period of time. I think that is where the next alpha could be generated. Second sector which looks good is, of course, the PSE index, which we've been talking of, public sector enterprises. And third one is IT. So IT still has about 15% of catch up to be done from, say, October 21 highs to current levels. So the catch up itself can translate into a good bit of upside for the IT stocks. Then, possibly the performance can seep down to some of the other sectors, like, auto is one. Anything that is make in India, that is also going to be in prime focus. So these are the areas of the market where we feel that there will be upside, there will be attraction for traders. If you are an investor, I think some of the themes should play out well. If you are a trader as well, I think given the next couple of months and the way we are placed as far as Nifty is concerned, there is a good bit of chance that we are able to see some good upside from these levels.
Okay, and what's your final Nifty target? We are at the end of 2022, so give us a 2023 target on the Nifty.
Yeah, so we have been very bullish on the Nifty since September. In fact, I have aired my views on your channel as well. 21,000 is where we see Nifty possibly by next Diwali. Okay. There are talks of the Fed pivot happening September, October. I think that will happen much sooner. Historically, if you see 40 years, 50 years of history, whenever the Fed has done a pivot, it has taken 9 months for that money to come back into equities.
Okay.
But we are in 2022 and things are happening at much faster pace. So I think this time around, we may see a pivot from the Fed much sooner than expected. Domestically, we have been very strong as far as the domestic economy is concerned, and the domestic flows which have supported the markets.
Just quickly, one target from you, Bank Nifty. If you're expecting the Nifty at 21,000, where do you expect the Bank Nifty?
Yeah, so I think if we take a 12-month target, we could be anywhere around 50 to 51,000 on the Bank Nifty. So I think banks is, as a sector, that sector has sort of come out of underperformance in COVID periods, and there is good bit of upside left.
Okay, thanks a lot for joining in and giving us your views on the market. We need to take a short break, but the other side of the